Today is Friday, June the 28th, and what an incredibly interesting week it was because we didn't know what to expect with the G20 and tariffs and Trump and China and Iran. And you know, from the beginning of the week, I was playing it pretty conservative, and I ended up very conservative. I now have 50% of my account in cash because I've had what I think is a good year. And I've pulled out all of my profit, or the equivalent amount of my profit, and then some, because obviously 50% of my cash is not my profit, or my account is not my profit. I wish it was, but it's not. But I want to be really conservative. I don't want to give up any gains like what happened last year in November and December when I was having a great year and then ended up having tax losses because November and December were such a disaster. So this year I'm conservative. Here's how the McClellan oscillator started the day, a little bit above zero, and that momentum carried into today, which had advancers leading decliners by 3-1. We had our typical swing at midday, like other days when it goes down. This went up, then down in the afternoon, and a very strong pop in all three markets at the end of the day. So it was lots of buying just before the G20 weekend, which surprised me, but didn't change my thesis that whatever I sell today, I can buy back again on Monday. Volume was below average across the board. We're used to seeing that. So that means that our market breadth is going to pop up probably to the 100 value and might be on its way to testing overbought again. Looking similar to, oh, this one actually went down to oversold. So we usually, the trend is for it when it goes from overbought to go down and test oversold and then come back. But we've bounced off the midline here. And that is not something that we've seen unless we go back to last summer where we churned for a long time, but then finally moved down to oversold and up. So that's, if this comes up to the overbought, that's going to be something new. Let's look at the charts and let's look at the big picture, the daily and the weekly. Remember the head and shoulders bounce off the neck that we saw yesterday. Today was our confirmation. This tells you that we could be set, barring any bad news coming out of the Osaka summit dinner with Xi and Trump. We could be headed up to test the new high for the third time, or the record high for the third time. Apple finished, it wasn't at 200. For some reason, I'm not updating. Let's move on while I take a look at Apple on another platform. I'm so sorry. Let's go over here to this account. Apple actually finished at 198.19, so this is wrong. So I am going to, this is a nice feature of Motive Wave. I'm going to clear the local data. And then it's going to refresh the data. And while it's doing that, let's go and look at CAT. Caterpillar finished the day with this gravestone doji, but the Chiku span is still moving up to the top of the cloud. Any good news out of the China talks is going to cause Caterpillar to pop. GDX, of which I'm pretty much sold out on, had a test of the 8 and moved up. I will get back into gold Monday if the dollar shows any signs of weakening. WDC, this is our China stock, China tech stock. I mean, they're not Chinese, but they are strongly influenced by our trade and tariffs with China. And they had an awesome day, up 7% today. So that's been just a great stock to hold on to. I never gave up on them. Whirlpool, we were looking for confirmation day for a break over the trend line. It didn't happen here. When it beat the trend line back on June the 19th, it lost it the next day and then continued to pull back. We did get confirmation, but we finished the day only 5 cents up and almost down in a gravestone position. So I will be buying back into Whirlpool on Monday. If it comes down and tests the trend line, I definitely will. If it continues higher, I definitely will also. But I'll be using covered calls for Whirlpool. But that all depends what happens Sunday morning after we hear about Saturday night's dinner. Let's go back to look at Apple, and it's still not refreshing. So I would have to get out of Motive Wave. But we know where we are. We know that the price of close was 198.05, which puts it right in here. So Apple was actually Apple was down $1.69 today, and that was the Johnny Ive leaving the company and setting up his own consulting firm, which just gave analysts and traders an opportunity to take a few profits. Apple is still strong. I decided that my 195, I started the week, remember, with 200 short calls, and I made about 80% profit and saw Apple moving down. So I rolled those down to 195 for $2 and something each. I was able to buy them back for 40 cents. That's not true. I lost a bit of money on them. So I got about 260 premium and 247 premium on the two lots. I was able to buy them back for 244. So basically a wash. But I was able to sell next week's for $4.64. So now my break even will be 195 plus 464, so it'll be just under 200. And I'm thinking Apple is still going to have sellers at the $200 level, which it has had now for quite some time. If we look at 200 right here, look at all the times that it's rejected off of 200 this week. So that could continue into next week. So I'm happy with having gotten rid of the 200s at the beginning of the week for some profit, getting out of the 195s essentially flat, and then getting a very good premium for the 195s for next week at $4.60 to $4.64. So if you got any questions about this, I can do a separate video or answer you online about how all these calls are working. If you can't quite picture what the transactions were when I sold the 200s, bought them back, sold the 195s, bought them back, and then rolled into next week's 195s. If you want to see all of that broken down, just say something in the comments and I'll explain that. But have a good weekend, and sure going to be interesting when it opens Monday.